Welcome to Ask Fear and Greed, where we take your questions and do our very best to answer them. I'm Michael Thompson, and good afternoon, Sean Aylmer.
Good afternoon, Michael.
Sean, today's question comes from Charlotte on Instagram, and there's multiple ways to get in touch with us: LinkedIn, Facebook, via our website, fearandgreed.com.au. Charlotte has chosen Instagram, and I like this question. This is my kind of question. Mm-hmm. She says, "Hi, Team Fear and Greed. Some news reports cover the markets by talking about the ASX 200, but others focus on the All Ords. What's the difference?" And she goes on to say, "Feel free to ignore if this is too simplistic." Nothing is ever too simplistic.
And I bet the majority of people listening probably couldn't answer this question exactly.
Absolutely. And it's one of those terms, isn't it, that you just kind of hear so often. And that's what I actually really like about this podcast, Ask Fear and Greed, is it's an opportunity to kind of just explain a little bit of the everyday jargon that everyone assumes that everyone knows. But if you put them on the spot and ask them to explain it, may not be able to do it. So, Sean, putting you on the spot, please explain.
Please explain. So the All Ordinaries is actually the oldest share index in Australia. I think 1960 it came about. It tracks the top 500 companies listed on the ASX by market value. So very, very broad. The ASX 200 tracks the top 200 companies on the ASX. Obviously, the All Ordinaries index is going to be bigger because it's sort of the 500 against the 200. Having said that, the ASX 200 really, the reason we talk about it is most of the moves happen in that ASX 200. If you're a company that's 300th or 400th on the list, there's not a lot of trading that goes on. It does introduce another concept which is worth mentioning, the All Ordinaries or the ASX Total Return Index. And that doesn't just include share prices, it actually includes dividends as well. So when you hear total return, you're actually not just talking about whether the stock went from $1.50 to $2. It's also all those dividends that have been added in the middle of it. So what you see in the market at the moment, so if you take the All Ordinaries, this year it's up about 9.4%. Whereas the ASX 200 is up 9.7%. So they broadly match each other, though because the large caps, the banks and that have done really well, the ASX 200 has sort of outperformed the All Ordinaries. We talk on Wall Street, we talk about NASDAQ, which is like tech focus. We talk the Dow Jones Industrial Average, which is actually the top 30 companies, the S&P 500, which is the 500 companies. They have all sorts of indexes around the place. But that's broadly what it is.
Okay, so there's about 2,000 companies listed, aren't there, on the ASX?
Yeah, I think that's right.
Thereabouts. So this is the All Ords is effectively tracking the top quarter.
In terms of number,
yeah,
but in terms of actual value in the market, it's probably 99.something%.
Yeah, this is my point, that it's really kind of almost it's 25% in terms of just the number of companies, but really it's kind of synonymous with the whole market overall, right?
Yeah, that's exactly right. But the ASX 200, I don't have the number in front of me, but that would be well over 90% of market cap, maybe 95, 96% of market cap.
Okay, all right. So does that mean then that because the market is relatively small in Australia, you really only need to look at the ASX 200 to get a very clear idea of what's going on, right?
Yeah, that's right. I mean, what you find when you get to like companies in the 200s, 300s, 400s, they are small, they're illiquid. They can have some massive share price moves, though, all sorts of things, because if one investor decides to buy or one investor decides to sell, the share price goes a long way. And so I suppose maybe we should introduce the All Ordinaries because it is a broader measure. I know, I'm just so used to the ASX 200, Michael. Yeah. I think I'm in trouble here.
As a business journalist, when you get to some of those smaller companies, the small caps, the micro caps, right? Did you kind of ever just go kind of fishing around for stories in amongst there? Because you say that there can be these massive kind of swings, right, in share prices, and there can be some fascinating stories behind those ones, right?
Yeah, fantastic stories. Absolutely fantastic. I mean, generally they're not really investable, or some of them aren't investable. So maybe they didn't suit the publications I were writing in, but some of the stories are just unreal.
Yeah. And you get some good kind of personality kind of things as well.
Definitely.
Kind of, it's just, it's anyway, maybe that's something that we can look into as well. Maybe we can do a micro cap story of the day.
Yes.
I love how
idea.
I'm giving you more work here. Have you noticed this?
I did notice that.
It's another bonus podcast for you, Sean. Anyway, look, Charlotte, I reckon we've answered that. Again, marking us, let's say out of 30, let's say 24 out of 30.
Well, out of 500, really, or out of 200. It should be one or the other.
Okay, well, let's pick out of 500. If we were to treat ourselves as the All Ords, I'd say 490.
You are generous.
I'm very generous. Anyway, thank you very much, Charlotte, for your question. And thank you, Sean, for answering it.
Thank you, Charlotte. Thank you, Michael.
If you have your own question that you would like us to answer, please send it on through via Instagram like Charlotte did, or head along to LinkedIn or Facebook or fearandgreed.com.au and send it through the website. I'm Michael Thompson, and this is Ask Fear and Greed.